Today I'm going to talk about the IRS Form W-4 for 2019. This is going to be the full walkthrough. It's going to start with the online version, but then I'm going to show you how to put it onto the paper version because it's the easiest way to do it. I'm also going to put a link at the bottom so you can check out our W-4 playlist for other variations of filling out the W-4. If this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name's Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. I'm going to pull it up on the screen right now. We're going to jump right into the IRS Form W-4 2019. I'm going to pull it up on the screen. So here we go. So this is exactly where you want to go. This is the URL. It's irs.gov/individuals/IRS-withholding-calculator. I know it's a big one. I'll put this link at the bottom. Click on it and you can get right to the IRS calculator. If you scroll right down, you're going to see the button that says Withholdings Calculator. Go ahead and click on it, and it's going to bring you right into this calculator. And this is going to be super simple. So we're going to start out with married filing jointly. So what's your filing status? Whatever your filing status is, go ahead and check it off. Let's start with married filing jointly. The next section is going to be, can someone claim you as a dependent on his or her tax return? Now remember, your spouse is not your dependent. This is only if you have qualifying children or qualifying relatives. If you have a question, go ahead and click on the dependents. It gives you a brief description. What's also really nice is if you're wondering whether or not you have a dependent, you can always go to the whom may I claim as a dependent. And there's this nice little worksheet. You can click on begin and you can go through it. It will help on whether or not you have a qualifying dependent. So go through that. We're not going to go through that in this video. I'm going to go right back into the W-4 calculator. So we have married filing jointly. Let's click off no. Can someone else claim you as a dependent? No. Click continue. So the first line is select the total number of jobs which you and your spouse are currently or will be employed. So if you are starting this job or you are currently employed, that's what you want to check off here. If you have other jobs that you no longer are employed, that's the next checkbox. So just go ahead and check off your current jobs or the ones that you will have. So if you're starting a job in say February and your spouse has a job right now, you want to put in 2. I'm going to flip this to 2 jobs to show you what that's going to look like. The first checkbox, if you already had a job that you are no longer employed at, again, check that off, check it off, or don't check it off. The next checkbox, if you or your spouse contributed to a tax-deferred retirement, such as a 401k this year. So if it's a SEP, a simple, a 401k, any of the retirement plans that are pre-tax, that's what you want to check off. So we'll go ahead and check that off to see what it looks like. The next one is checkbox if you or your spouse contributed to a cafeteria or other pre-tax plans such as a health insurance this year. Now what this is referring to is these are the ways that you can lower your taxable income. So if that's the case, the calculator wants to account for it. So if that's the case, go ahead and check it off. I'm not going to check it off. We're just going to move forward on that. But if you do, you're going to be able to lower your taxable income and ultimately have more money in your paycheck. The next one is checkbox if you and your spouse received the scholarship or fellowship grant this year that must be included in gross income. So again, if you received the scholarship and it is taxable as income, then you have to add it to your overall income. And in order to account for that, you'd have to check it off. So the next screen, if you did check it off, you'll be able to put in the amount that you received. If we scroll down and we look at select the number of dependents you will claim on your tax return. So let's say I'm going to put in 3. I have 3 kids, so I'll just put in 3 there. Next one is if you or your spouse is over 65 or blind, go ahead and check off the appropriate boxes. Now, the next one, a lot of people get confused on the child and dependent care credit. So the first line is if you're putting your child in daycare because you're either looking for work or you already have a job, that's a qualifying expense. This isn't piano lessons, swimming lessons. That's not going to qualify. It has to be a daycare. Now, you also want to note that this is child and dependent. So if you have an elderly parent, for instance, that you're taking care of and during the day, you bring that parent to a dependent care facility, that would qualify, but you want to verify that it is a qualifying event. So if that's the case, you can go ahead and check it off. on how many will qualify for it. You don't have to worry about income limits at this point in the calculator because the calculator is going to do it for you. That's the really nice thing about this calculator. And then you're going to go ahead and put those expenses right down in this box right here, how much expenses you do have. Now, if you're not aware on those child care expenses, it can only be up to $3,000 or $6,000 if you have 2 or more children, and it's only a credit of up to 35% of that amount. So if you have an exorbitant amount of child or dependent care expenses, they may or may not be totally covered. So you want to make sure that you understand those limits so you're not overspending thinking that you're going to get a bigger tax refund. The next section is going to look specifically for the child tax credit. And remember, it's now $2,000, not $1,000. So if you do qualify for the child tax credit, that is a huge opportunity to reduce your taxes. So I'm going to go ahead and put, I'm going to go ahead and put 3 because I have 3 kids. The earned income tax credit, if you have qualifying children, go ahead and mark it off. Again, if you qualify, the calculator will do it for you. So let's say we go ahead and put 3 or more because I have 3 or more kids. In 2017, to qualify for the child tax credit, your income had to be as a single below $75,000. But that has increased to $200,000. If you're married filing jointly, as in this instance, it's increased from $110,000 to $400,000. So if you're going over this, don't breeze over the child tax credit because the income limits have increased significantly. So you might qualify for it. So if that's the case, be sure to check it off. Now, this last one down here is a little tricky. The other credits, and if you click on the link, the tax credits, there's a list of some of the tax credits that you can look at. One that I will point out is the retirement savers credit. So if you do meet certain income, it's right here, the retirement savings contributions credit, which is also known as the savers credit. And it's one of the big ones that if you do make under a certain amount, you can actually reduce your taxes further with an additional credit. So you want to take a look at that, but make sure you understand what the income limits are on each one of those credits, because if you take it and you don't qualify for it, you might end up owing more taxes at the end of the year. So we're going to click continue here. Now on this page, we can take a look and see jobs 1 and jobs 2, because if you recall from the previous page, we put that we have 2 jobs. The first line that you're going to look at is enter the gross wages, salaries, and tips that you can expect to receive in 2019. Now remember, if you're starting your job in February, March, or April, and not January 1st, then whatever you're going to earn for an annualized basis, so let's say that you have a job that you're making $50,000 per year, but you're going to start it in February. If that's the case, you need to do the math because you're not going to make $50,000 in 2019. You're going to make only 11 months worth of $50,000, if that makes any sense. So basically the math looks like this. If you have $50,000 and you divide that by 12, that's going to give you $4,166.66. That is the amount of money that you're making on a monthly basis. And again, if you start on February 1st, that means you only have 11 months earning that amount. So you'd multiply that by 11, which gives you $45,833. So again, while you might be making $50,000 on any 12-month basis, if you only worked 11 months of the year, you have to do the math. And that's what the most important part is here. So if that's the case and we say January 1st or right away, let's say we do $50,000 and $30,000. If you're going to get any bonuses, I'm going to put 0, but if you think you're going to get any bonuses and you put them in here, it'll help you with your tax liability and figure out what your withholding should be. So because we checked off on the previous page that we have a 401k, it's going to populate this line that says enter your total 2019 contributions, such as your 401k. Now, if you didn't check that box off, you're not going to see that on this page. It won't be there. But since we did, it will appear there. So let's say that we want to save $5,000 into our 401ks, and we'll put $2,000 into this 401k. The numbers I'm putting in here are arbitrary. It's really going to depend on how much you're contributing. Now, again, if you make $50,000 a year and you're contributing 3%, you can do that math. Just do 50,000 times 0.03 is $1,500. Your employer match doesn't count on this page. It doesn't matter. It's just going to go into your plan. So don't worry about that. Just multiply the percentage that you contribute from your own paycheck into your plan. So if that's 1,500, you could put it in there. If it's more than that, obviously adjust it. Now the next two boxes are going to be a little bit more relevant if you're already working throughout the year and you're going back and making an adjustment. Why is that? Because you're going to have to look back at your pay stub to see how much was already withheld. If you don't have any withholdings, then you would put 0. On that same pay stub, you're also going to have how much you withheld from your last paycheck. So also go ahead and put that in there. So we're just going to put 0 because we're early in the year and we haven't withheld anything. In the next section, how frequently you are paid. So if you are paid weekly, every 2 weeks, twice a month, or monthly, that's going to vary. The difference between every 2 weeks and twice a month would be 24 pay periods for the year, and every 2 weeks would be 26. It's going to vary slightly, but you want to make sure that you're doing it correctly. If you get paid on the same date twice a month, of course, it's going to be twice a month. If you get paid every other week, then that is going to be every 2 weeks. So let's go ahead and put twice a month, put what is relevant in your situation, and then pick the closest date that you started this job. This is going to help you do the adjustment. Now, again, let's say we put February 1st here, but we left that $50,000. It's going to assume that we're going to make $50,000 between February 1st and December 31st. And if that's the case, then obviously leave that. But here's where you can make the mistake if you don't have those numbers correct. So I'm going to flip it back to January 1st because that's what we're going to make throughout the course of the year. If you have any non-wage income, go ahead and put it in that section. This is just adjusting your additional taxable income. Now, the last section on this page, the adjustments, it's actually kind of important because if you don't have a 401k and you want to use a traditional IRA, this is exactly where you would look. So you want to look at here and say, enter an estimate of your 2019 adjustments to income, including deductible IRA. Deductible IRA is your traditional IRA. So it's pre-tax dollars that's lowering your taxable income. So for this year, it's going to be up to $6,000. Now, if you have a 401k through work, you're not eligible for a traditional IRA. So if you do qualify, you want to put it in here, or if you're taking advantage of one, then put it in here. So if you are using a traditional IRA, that's where you would want to put it. And of course, educational loan interest. So let's click continue. We're going to skip that. Now here is the itemized deductions. This is the only page I'm not going to get into because the itemized deductions get a little bit more complicated if you're trying to reduce your overall tax liability. And for most people, this deductions page has basically been phased out. So the deductions page has been phased out for most people. And the reason it's been phased out is because the standard deduction has increased significantly. So the standard deduction for married filing jointly is $24,000. You can see that right up there at the top. Now that means if you don't have itemized deductions that are greater than $24,000, then you're just going to take the standard deduction. So I'm going to go ahead and click continue. Now this is our answer page. And if we look right in the middle here, we're going to see that job 1 earner should put in 4 allowances and job 2 earner should put in 9 allowances. And it also is going to help you understand what your total anticipated tax liability is for the year. And in this case, I adjusted the numbers on the income levels to $100,000. So based on the information you previously entered, your anticipated income for tax year 2019 is $1,542. So according to these results, and it says it right there in the first line, based on the information you previously entered, your anticipated income tax for 2019 is $1,542. Now, if you put in these allowances, it's going to adjust your paycheck. Now, on this page, it's going to give you the allowances, and you can see right below job 1 and 2, it gives you the link to the Form W-4. So if you don't have it, just click on the link and it will pop right up, scroll straight down. This is the only part that you need to fill out. So that's what we're going to do next. So here's where we can take the answers from the online version and put it onto the paper version. And this is exactly what you want to do. So let's go ahead and fill out this section together. Now, this part right here is what you need to give to your employer. And it says it right here, separate here and give Form W-4 to your employer. So just cut it straight off, rip it. It doesn't matter. They only need this part. They don't need the worksheet. The worksheet is for your records. Now, if you've done the online version, that last page is what you can print out and save if you just want to know how you got to the calculations that you did. So let's go ahead and fill out this paper version right here. So your first name goes right in there. I'll put Travis Sickle. Your social security, so we'll put 1, 2, 3-4, 5-6, 7, 8, 9. Of course, put whatever your social security is. Your home address, so put 1, 2, 3, this street. And you're married filing jointly, so put in married filing jointly. Of course, if you're single or married, but you want to do single, then you can do it here. But married filing jointly, if that's what you checked off, put your city, state, and zip down here. Now, the real important part is line 5, total number of allowances you're claiming. So on job 1 and 2, we had 4 and 9. So we can either do 4 or put 9, whatever yours is. Now, if it says a different number, go ahead and put it in there. Line 5. Line 6 is additional amount, if any, you want it withheld from each paycheck. Now, if you needed to put, say, 0 allowances and still withhold additional dollars, then the calculator will tell you that. But beyond that, there wouldn't be any number here. So either just put a dash or put 0. It doesn't matter. But line 6 is only if you need to withhold additional dollars. And the same thing for line 7. If you are exempt from withholdings tax, then you can write the word exempt as it says here. If you meet both conditions, write exempt here. And you write exempt here. Now, since our calculator doesn't say exempt, then we're not going to put anything there either. Now go ahead and sign it right there and then put today's date. So January 1st, 2019. Whatever today's date is, you can go ahead and put it in there. Now these last 3 boxes, you can either fill them out or just give it to your employer and they'll be able to fill it out. All they need to do is put in their own address. And if it's a home office address or whatever, it doesn't matter. Just go ahead and put it in there. And then box 9, first date of employment, if you know it. If you don't, ask your HR department, ask your boss, ask your manager. They'll be able to find this information for you. And of course, their EIN, which is the tax number of the business. Again, your employer, HR, or manager is going to know that information, so you can put that in there or have them do it for you. But again, all you need is this bottom part. So if we literally rip it off, so if we just cut it off there, bend it, rip it, this is all you need. That is it. This page right here. That's all you're going to give to your employer. Everything else is for your own records. Of course, you can make a copy of this, take a picture of it, keep it for your own records, but this is the only thing that you're going to hand to your employer. So that does it for the IRS Form W-4 for 2019. Now, if you change jobs or want to go back and look at it later, if you don't think it's correct, go through it again and make sure that your answers are correct. It's perfectly fine to update it as often as necessary. If you do have questions, concerns, comments, put them in the bottom in the comment section. And again, check out our playlist for our other W-4 videos that I'll do more variations. If you don't see the variation that you're looking for, go ahead and send me a message and I will be happy to walk through it. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.